Imagine waking up one morning. The stock market is crashing. Businesses are shutting down. Banks are failing. News anchors are using words like recession, financial panic, economic collapse. Millions of people immediately ask one question: how do I survive? But somewhere else, someone is asking a completely different question: what can I buy? History shows something shocking. Almost every major economic crisis created a brand new generation of millionaires. Not because they were lucky, not because they were born rich, but because they understood something everyone else ignored. While the crowd saw disaster, they saw discounted opportunity. During the Great Depression, fortunes were built. After the 2008 financial crisis, thousands quietly became millionaires. During the COVID crash, some people made more money in months than they had in decades. So why does this keep happening? Why do crises destroy wealth for millions, yet create unimaginable wealth for a small minority? The answer isn't what most people think, because economic crises don't destroy opportunity. They simply transfer it. And once you understand how that transfer works, you'll never look at recessions the same way again. Level 1. The Great Wealth Transfer. Most people believe wealth disappears during a recession. It doesn't. It changes hands. Think about a game of Monopoly. Nobody burns the money. The properties simply move from weak players to stronger ones. That's exactly what happens in real economies. When businesses run out of cash, they sell valuable assets. Factories, real estate, equipment, entire companies, often for a fraction of what they're actually worth. This is called a distressed sale. It's not that the asset suddenly became worthless. The owner simply can't afford to keep it. Cash becomes more valuable than ownership. That's when investors step in. During the 2008 financial crisis, thousands of houses were foreclosed. Families lost homes. Banks wanted cash. Investment firms bought entire neighborhoods at huge discounts. Years later, housing prices recovered. Many of those investors multiplied their money several times over. The same houses, different owners, same economy, different outcome. Crises don't erase value. They change who owns it. That is the first secret. Level 2. Fear is the most expensive emotion. Every financial crisis follows the same emotional cycle: confidence, excitement, greed, fear, panic, capitulation, then recovery. The biggest mistake most people make is confusing price with value. When stock markets crash, people assume companies suddenly became terrible businesses. Sometimes they do, most don't. Imagine your favorite restaurant. Yesterday it was worth $100. Today someone offers it for $60. Nothing changed. Same customers, same food, same location. Wouldn't you consider buying? That's exactly what happens in financial markets. During panic, excellent companies often become temporarily cheap. This happened in 2020. Global markets collapsed in weeks. Companies like Apple, Microsoft, Amazon, and many others lost enormous amounts of market value. Yet their businesses continued operating. As fear faded, prices recovered. Investors who bought during the panic saw remarkable gains over the following years. This is why legendary investor Warren Buffett famously said, "Be fearful when others are greedy, and greedy when others are fearful." Simple advice, extremely difficult to follow, because fear is contagious. Humans evolved to run with the crowd. Markets reward people who can think independently. Level 3. Cash becomes a superpower. During good times, everyone wants to invest. Money is easy. Loans are everywhere. Asset prices rise. Competition is intense. Then the economy slows. Suddenly, everything changes. Banks stop lending. Businesses cut spending. Consumers become cautious. Cash becomes king. Why? Because cash gives you options. Imagine two investors. Investor A borrowed heavily during the boom. Investor B kept an emergency reserve. When markets crash, Investor A is forced to sell. Investor B is free to buy. One loses assets, the other acquires them. This is why wealthy families often appear calm during recessions. They prepared long before the crisis arrived. The Rothschild banking family reportedly followed one principle for centuries: maintain liquidity. When opportunities appear, move quickly. Large investment firms do the same. Private equity companies often raise billions before recessions. They wait patiently, then buy struggling businesses at attractive prices. Preparation always beats prediction. Nobody consistently predicts recessions. Successful investors simply prepare for them. Level 4. The businesses that explode after crises. Here's something fascinating. Many of today's biggest companies didn't simply survive economic crises. They grew because of them. Take Airbnb. The company launched during the 2008 financial crisis. People suddenly needed extra income. Renting spare rooms became attractive. Customers wanted cheaper travel. The timing couldn't have been better. Then there's Uber. Many drivers joined because traditional jobs became harder to find. Economic hardship created supply. Consumer demand created opportunity. Even Microsoft and Apple strengthened their positions after previous downturns by continuing to innovate while weaker competitors cut back. History repeatedly rewards businesses that solve new problems created by changing economic conditions. Every crisis creates new consumer behavior: remote work, online shopping, digital payments, budget travel, discount retailers. Artificial intelligence. New winners often emerge because they solve yesterday's impossible problems. The businesses that thrive aren't always the biggest. They're the fastest at adapting. That is another hidden pattern. Crises accelerate change, and change creates wealth. Level 5. The mindset that builds fortunes. Most people spend recessions asking, what if everything gets worse? Future millionaires ask, what if this is temporary? That single difference changes everything. Economic history is remarkably consistent. The Great Depression ended. The oil crisis ended. The dot-com crash ended. The global financial crisis ended. COVID eventually passed. Markets recovered. Businesses adapted. Innovation continued. Entire industries transformed. Every recession feels permanent while you're living through it. It never is. The people who understand this don't ignore risk. They simply recognize that economies move in cycles: expansion, peak, contraction, recovery, then the cycle repeats. The goal isn't to avoid every downturn, it's to survive them and position yourself for the recovery. This requires patience, discipline, education, and emotional control. Because investing during a crisis rarely feels comfortable. It usually feels terrifying. That's exactly why opportunities exist. If buying discounted assets felt easy, everyone would do it. The biggest returns usually belong to those willing to act when uncertainty is highest. Not recklessly, not blindly, but with preparation, research, and a long-term perspective. Conclusion. Economic crises have always reshaped the world. They close companies, destroy jobs, shake governments, and challenge millions of families. That reality should never be underestimated, but history reveals another truth. Every major downturn also creates extraordinary opportunity. Assets become cheaper, new businesses emerge, old industries evolve, technology accelerates, consumer habits change, and wealth quietly changes hands. The people who consistently benefit aren't necessarily the smartest or the richest. They're often the most prepared. They build emergency funds during good times. They avoid excessive debt. They keep learning while others panic. They focus on value instead of headlines. Most importantly, they understand one timeless principle. Economic crises don't just test people. They reveal who was prepared before the test began. The next recession will arrive someday. Nobody knows exactly when. Nobody knows exactly how severe it will be. But history suggests one thing with remarkable consistency. While millions will see only fear, a small group will quietly recognize the beginning of their greatest financial opportunity. The question isn't whether another crisis will come. The real question is, when it does, which side of history will you be on?